Hello, everybody, and welcome to episode number 105 of Confessions of a Market Maker. I'm your co-host, Ray, aka All Day Ray, aka Cannoli Fingers, and I'm joined here by my decadent co-host, former market maker, 20 years and current day retail trader, the celebrated son of House Street, who's brought to you over 200 deals, gone public. Nowadays, you can catch him gallivanting in Europe. JJ, how's it going?
Good, brother. How are you?
I'm doing great, man. Doing great. And our guest is making her second appearance on the podcast. She began her professional trading career in 1981, making markets and options as a member of two exchanges. She has been the principal trader for several hedge funds. Her early success was recognized by Jack Schwager in his renowned Market Wizard series. The Sardine Trader, Linda Raschke. Linda, how's it going?
Sardine trader. Yeah.
How's it going, Linda? Thanks for joining us again.
Pretty decent. Yes.
All right. Yeah. So an interesting day today in the markets. I had to go back and look, Linda, episode 19 was when you first came on. So, we really appreciate you coming on early on in the podcast. So I put this about 3.5 years ago. A lot of interesting things have happened in the markets in the world since. I guess, how you been?
Always. Something's always interesting happening every year, every decade. Yeah.
Yes.
Been really good.
Good. Glad to hear it. We had Damon on right after you, episode 20. That's always
Awesome.
A memorable one for me. That was a real great time. How's Damon been? Is he still doing concerts?
Still trucking away. Yep. Still trucking away.
All right. Excellent. So I guess we could start the conversation here. Obviously, like I said, it's been about 3.5 years or so. Lots happened in the market, and maybe some things we could touch on. And I'll let you kind of pick, where you want to start. We've had the COVID crash, subsequent recovery. We've had what the meme stock craze is going on. Now we got, current situation we got going on, this banking situation. I'll probably missed some stuff in between. Is there anywhere you would like to start?
No, not in particular. I'm not the one to talk about meme stocks. They're not my wheelhouse. And I don't play that game, but I trade the assorted futures markets, about 30 different futures markets, and I like playing in some stocks too. But I find the futures primarily to be my wheelhouse. So There you go. And today we're just about to ring the bell and touch that spike high on these S&Ps. Just a nice visible chart point. Ding, ding, ding. It might be another two handles up, 41.19 and pocket change. But I mean, that's my game. I'm technical. I'm 100% technical. Of course, I look at the seasonals and the cash on the sidelines and the sentiment and all that sort of stuff. But I pretty much operate on the intraday technicals and the dailies and the weeklies.
Now futures is that what you started with, Linda?
I started in the equity options. So I made markets on first the Pacific Coast Stock Exchange, and then I was a market maker in Philadelphia. And those days, the options exchanges were a whole lot more active. Nowadays, all the pits have pretty much gone electronic. So there's that whole arena disappeared a good, I'd say, 15 years ago in the U.S. But it's such a lovely luxury to have electronic execution and just one mouse click. You can do some decent size. I mean, there's no slippage. The liquidity is fabulous. You've got all kinds of volatility and can really go and make a living in any one market, even corn, if you were astute on working that.
So with futures, is there I might have missed it when you said it, is anything specific futures you gravitate towards?
Well, the S&Ps have always been my main future market. I mean, I started trading the S&P contract the very first day that it was listed. So, I think it has the best intraday swings for day traders. It's got, you've got the supporting market internals. So obviously on a day like today, you've got exceptional breadth for the second day in a row, pretty important. And that's because you have the small caps participating and so forth. But all of these add some background flavor to the S&Ps, just overall market tone, color, but despite all of that, I'm still triggering just based on what is the play for that day. And if I can build something into holding for maybe anywhere from 2 to 5 days. That's wonderful. Pretty rare I hold positions for more than a week max, unless it's exceptional weekly structure, and you might only get a setup like that maybe once every quarter. So the frequency of occurrence is a lot less, but I try to work several different programs. I don't do the type of activity or the diversification of programs that I used to do when I had my fund. I had several support members then, so it's a different game. I'm back to being a lowly peon, and I've actually been retired for 7 years. So now I mix periods of tennis, when I'm not injured, then tennis is my main game. And then when I get injured, the markets are back to my main game. So yeah, a healthy mix at this point in my career.
Well, it's gotta be nice having having that luxury, step away when you can. Linda, do you have any preference, or maybe just speak to the maybe the pros and cons of managing other people's money versus trading your own account?
It's a funny thing. Some people do very well trading other people's monies, and other people do not. They don't like that scrutiny. These days, if you're going to do it right and have a fund, or be registered as a CTA or something like that, the regulatory layers are deep and steep in price. So you got to make sure you can do something on size. So if you're going to go that route, which is definitely, if you're younger and have a program that can be scalable, you want to think in that type of framework. Can I have a program that's scalable, that I can do consistently, not too much standard deviation on the bottom line? And, if you can raise money, you really need at least about a $50 million fund size, preferably up to 100 million, if you're going to be able to overcome all those regulatory fees and stuff. Of course, there's other types of vehicles that you can use if you want to trade other monies. Leader follower programs, private family offices are a great source these days, but you're not going to get anywhere unless you have a real-time track record, pretty much of 3 years. And, people want to see your consistency in your style. And, but that's sort of beyond the talk of our realm today. But I think if you're a retail trader and you could even think in those types of terms, whether you go on and aspire to manage money or not, sort of missing the point. The point is you have to think of yourself as being your own best client. So if I am my own best client, I have to have a niche or a consistent bread and butter game, a consistent style. It could be seasonals, it could be trend following, it could be systematic volatility breakout, it could be short-term discretionary trading on the S&Ps, using market profile or whatever tools you want. But whatever it is that you eventually choose to do, you got to settle into that as your style, know all the nuances, and then after you've done all that exploration of trying different styles, even if it's options trading and so forth, because there's a lot of different ways that you can skin a cat in there. Only after you've arrived at that, which can take about 3 years, you want to then start increasing your size, but not beforehand, and that's a big mistake that people do, is trying to get too big too soon. And you really want to just see some consistency in the bottom line for a good period of time. In other words, it's called trade management, right? Until you can prove that you've exercised well thought out trade management through all types of markets environment, bull markets, bear markets, flat markets, then you can start to scale up. And that's where you then really become a real profitable trader. Not that you can't make money, scalping one lots in the S&Ps, but, for those who have 2 or 3 kids to put through college, pay a mortgage, so forth. It's a lot of planning and organization to create a business, structure your trading and program as a business. It takes a lot of hours. I really think that people grossly underestimate the amount of hours that it takes. So, but in the meantime, it's still a fun game, and it keeps the mind fresh. It's technical analysis is one of those things that you can, enjoy studying, till you're 90 years old. So I like that aspect of it.
Absolutely. It seems to me, Linda, that you still have like a deep love for the game of trading, that it hasn't waned over the years at all.
No, I mean, you enjoy something. I feel very confident, with what I do. And so that's what makes it fun. And it doesn't matter, if you're a golf player or tennis player or anything, when you feel proficient and confident, it's always fun. But I also know that, I am retired. So even though I'm sitting in front of my screens every day, go figure. But, there's lifestyle trade-offs, so when I was, working on becoming what I did, I'm putting all those hours in, probably worked 80 hours a week for years and years and years, weekends, everything, research and so forth. There's a trade-off in your lifestyle, friends, family, all those types of things. I was fortunate because I had a husband who was Mr. Mom, so he could take care of the kid, do the cooking, all that kind of stuff. And I could, run my business. That's not always, everybody doesn't have that luxury always, but you have to make choices and say, I'm, choosing to put in the hours here. And, other things are going to have to take a back burner. And I think you have to consciously make that decision.
Yep.
I'm not ready to do that anymore at this point in my life. I want to go play tennis and travel and do other things. So yeah.
That's awesome.
And you deserve it. The amount of work that you've put in, that's definite. And just want to say how excited I am to have you here. They're the reason that, and I'm sure I tell this to everybody, she's the reason why I got a job in the markets, because I read what you did in Market Wizards and how you went and got a job near the exchange. And I did the exact same thing.
Good.
And I weaseled my way in. So if not for you, that's where I got the idea. I was like, and that's how I got
Which
my job.
exchange did you go down to?
I was Vancouver Stock Exchange. And
Vancouver.
Yeah, because I'm Canadian. And so I was at Vancouver, and I was a bouncer in one of the nightclubs. I'd gotten a microbiology degree, and then, of course, couldn't get in med school. I wasn't smart enough.
The radical zigzag career path there.
I just, I'm a typical South Asian kid, and my parents wanted me to go to med school. I couldn't get in. I wasn't smart enough. So, I was a bouncer in this nightclub, and all the VSE traders came in, and that's how they gave me Liar's Poker. I was hooked. And then I read, Market Wizards, and I'm like, oh yeah, I'll go get a job. I went and got a government job, started wearing suits. All of a sudden, next thing you know, I'm what they call a phone chimp, and working investor relations, and then weaseled my way onto a trade desk. And that's all because I got the idea from you. So I'm always eternally grateful.
But it's not a straight line path, is it, huh? And it probably ended up being a lot more hours than you ever thought.
Oh my gosh, yeah. And I was just, all I did was liquidate positions for insiders when they took companies public, so I was a liquidating guy and just feeding order flow to market makers. But then when I became a retail trader, oh my God, that was the hardest thing, because then you have to do research. When the bell rang, we used to go to the bar. When the bell rings and you're a retail or a prop trader, that's when you actually start doing research and all your work. And I was like, oh man, this is hard. You can't cheat and you can't hide trades in somebody else's inventory, or, I mean,
those out trades they went into the drawer, right?
Yeah, exactly. My boss used to always hide his tickets underneath the blotter if the trades weren't working out, under his desk blotter. So,
I think everybody that was on the exchange floors at one point or another has their own war stories or has seen those of others. So,
yeah. So, yeah, we totally respect, because I remember following, you telling us your workflow and how you would go through the charts and all of that stuff. And that was early on when I was a retail trader. I just wanted to keep thanking you for that, because it's a lot because of you that I got that discipline that I didn't have. And I had to develop that discipline, which is hard for me because I was inherently lazy. So, but we owe a lot to you for that. Thank you so much.
Okay. And here you are now.
Yeah, exactly.
just take a quick second to shout out our good friends of the podcast, Apex Trader and Top Step Funding. Any listener of this podcast that has the skills to pass an evaluation can become a prop trader, fully funded by either Apex Trader or Top Step Funding. Our own Micro E-Futures trading community has many members who are now fully funded. No need to trade your own money. Keep 90% of the profits. To learn more, visit our website at microefutures.com. Linda, you've been trading for decades now. I'm curious if your process, your trading strategies have, if you've added any or modified some over the years.
Believe it or not, they have not. Absolutely nothing has changed. It's every couple of years, there's a new, news cycle, new story, new drama, Arab Spring, MF Global, Y2K, flash crash, the list goes on and on and on. So you always expect that there will be things that you can't see around the corner. Case in point, the pandemic, so you have to recognize that models don't account for all these other outliers that can come along. So you have to allow some flexibility in your models that there are things that we can't see. And when I say technical analysis, for me, it's not really a forecasting business per se, trading. It's more money management. Where are the risk levels, and support and resistance. And then, you position yourself in the direction, of your bias or your model or whatever, but then you see what the market gives you. You take what the market gives. So I don't project to certain levels. I can have targets, like obviously today, the S&Ps are rallying the last day of the quarter, and there was that really visible spike high up here, that 41.19, 50. There's an unfilled gap on the chart above that. If we reverted back down, which we're not going to today, you've got the previous day's high and low. So essentially, that's the type of trader that I am. Where are the levels? What I like levels that everybody sees. So I'm not into this fib stuff or, Gann retracements. Not that it doesn't have value for people as a tape reading tool, but I'm always playing by, is the market, where are the visible levels that everybody sees? They're kind of magnets for the market, as well as that's what creates structure. So I'm a pure swing trader in the way that I organize my structure, highs and lows, previous, intraday highs and lows, daily highs and lows. This is a game of looking at, is there a degree of trendiness? Are we in a noise consolidating range? And so each day I come in, I'm really saying, what is the play for the day? Am I looking to trade from the long side today? Or perhaps maybe we're 4 days up in a row, or, 4 days low to high, and we might be due for a little bit high to low day. And then if that were the case, we did get our high to low day, we're probably going to get another low to high day the next day, a buying day, just because you already had this degree of trendiness. And sometimes we have these little consolidation, 3 bars of price overlap. And we can come out of that, and then you're going to be moving again back towards a previous level. So, that's really simplistic there, but that type of process, is really how I approach the markets. I don't know where we'll be a month from now. I do a lot of sentiment work. I really like that a lot, because it tells me indirectly sort of how much cash is on the sidelines. That cash doesn't have to come into the market. For example, right now, there is a ton of cash on the sidelines. It's also parked in money market funds, which are paying okay, but you can't have a market going down when everybody's already bearish, because it's, telling me they're already all in cash. So the sentiment work, is just a background thing. And then I frame it out with the short term. Okay, is it today a trend day? If so, I want to see if I can establish positions in the first 30 minutes of the day. And then my stop's going to go at the low of the day. And then I try to hold positions overnight, because there really is an edge to having overnight follow through, unless the market's in a real consolidating mode, and then might as well get out at the end of the day. And then once in a while, maybe once a month or once a quarter, there will be some market structure that does lend itself, towards perhaps a 3 to 4 to 5 week run. So it's really, just constantly updating the market structure as new data points, come on. So
that was great. You said a lot of good things that I want to follow up with you on. For you to gauge the sentiment, Linda, what are you looking at?
I'm a simpleton. I like the put call ratio for the equities only, and I usually keep a moving average of that. I like the AAII sentiment readings. Those have been they're sort of different groups. So AAII is a more mature type of profile, a little bit better capitalized than perhaps Investors Intelligence, but there's about 3 or 4 surveys that are done each week that come out with that. And then the put call ratios, and that works for me. I don't use VIX as a sentiment indicator per se, because it's pretty much 100% inversely correlated to the market's price. It just represents the implied volatility, which tends to go up when people are buying puts, so there's sort of a given there with a skew in it. But, I'm sure a lot of people consider that to be part of a sentiment reading. I don't interpret it that way.
One of the market wizards in the latest book, Unknown Market Wizards, I believe is the name of it. Jason Shapiro, we've had him on the podcast previously. I saw him tweet yesterday. He said he believes we're witnessing the biggest divergence between sentiment and price action ever. Is that a statement you would agree with?
I don't know what time horizon he's looking at. So if you wanted to look at weekly charts of these S&Ps, we've really been in a big, weekly range. So, is it diverging from a very short-term, thing? I'm not really sure. A lot of these things, especially sentiment, when you're going to make a statement like that, are very context-oriented. Does that make sense?
Sure, yeah.
Okay, so I see the S&Ps, if I just go back over a 2-year time horizon, we're basically in the middle of that range. So, and also there's the issue of different sectors, so I'm sure that with the volatility in the banking sector, perhaps that created a little bit more bearishness, but rightly so on that particular sector, as it was falling out the downside. Now it's kind of landed with a thud, so I guess you could say that there's been more of a divergence between the groups. In particular, we had the FANGs, resurgence of the FANGs at the beginning of the year tended to be up a pretty rather smart percent, and the small caps we're not participating, but of course they're a little bit more overweighted with some of these regional bank type of stocks. Now I think you're seeing that go away today. The Russell's up pretty swiftly, and it's going to come out of a base there. Most people that do that type of work in the market would agree that the seasonals for the month of April are pretty strong, and that's what we're seeing right now. Cash coming back in. The market's going to squeeze higher until people do start to become more bullish. So maybe that's what he's thinking of. But if I just look at the weekly S&Ps for 2 years, we're sort of right in the middle of a range.
Mm-hmm. Yeah, I think the way I interpreted it, and I think he had some follow-up tweets to it, I think was probably the sentiment of everyone thinks the market should be going down, but here we are still climbing up. But maybe that's just, I could be misinterpreting.
People get too caught up in the macro, and that's the problem. So I don't do macro. I don't do fundamentals. If I do, I'm likely to get the story wrong. 99% of macro stuff for me is money flows, how much cash is on the sidelines, and that will be reflected in the sentiment readings. But, just because there's prospects of a recession on the horizon does not necessarily mean the market goes down. There have been periods in history where the market still rallies, even during a recessionary period. And so once you start doing this macro outlook, that's a very, very, very long time horizon. Somebody can be an astute macro, analyst, and they could be right 2 years from now. It doesn't mean that you're going to be right in a month or 2 months. So that's why I say the time horizon is really important.
Sure. Because that macro type of work, Linda, right? I mean, I'd imagine probably most people listening to this podcast and 90% of the traders probably doesn't apply to, right? That.
I don't think most traders have the significant amount of capital that would force them onto a macro time horizon. Usually that's for, funds that have billions of dollars and still need to move money. And you can't do that on the shorter time frames like the technicals would allow you to do. But with that said, you can take a well-known entity like Ray Dalio, and despite him being proficient in macro, his stuff is 100% automated. There is no human decision-making with the management of his fund. So, people can talk certain ways, but are they positioned that way? Or are they just giving their outlook? Yes, 20 years from now, the icebergs will be melting, and half of Miami is going to be underwater. So what good does that do you as a trader, right?
Yeah. Well, let's hope Miami doesn't get underwater. Really hope not. We're a little too close to Miami.
Where do you live?
I'm in the Palm Beach area. You're in Wellington, right?
I am. I didn't know you were in Palm Beach.
Yes. I need to come down to watch some of those polo matches.
Yeah, last time
you only got about 2 more weeks in the season there. So
oh man, dude, is there any betting on polo? Is that a thing? Because
I'm sure there's stuff on the side, but
then I'd be real interested. Yeah,
I think that's not really. It's not a betting sport. It's more like wear a fancy hat, drink a glass of champagne, go out and stomp divots in the in between the chukkers, and get together with a group of friends. It's really a social thing.
Well, it looks like a great time. It really does. While we're on the topic of horses, not to get too sidetracked from trading, do you ever go to the thoroughbred races, Gulfstream Park at all?
I have not. No.
Okay.
I'm going to a thoroughbred race for a long time.
Oh, I love those. I'm going to the Florida Derby on Sunday, I believe it is.
Oh, okay.
Yeah. So that should be a lot of fun.
Well, if you see a polo game in the next year, I'll make it a point to go to a race.
Oh, that would be a lot of fun. That'd be a lot of fun.
And last time you were here, we found out that you're an opera buff. And I wanted to tell you, I moved to London last year and I ended up seeing Tosca.
Oh, wonderful.
But it was in English. So I was sitting there waiting for Visitarte, and it's just not the same when it's not in Italian. So
yeah, usually what they do these days, depending on if you're at the Met or the Lyric up in Chicago, they'll show above the translation in English, so that what's happening, and it makes it a little bit more audience friendly. Or some houses have it actually on the back of the chairs, but that's sort of doing it an injustice to translate it to English.
Yeah, it just lost all its all the magic of it.
Yeah, I just got super involved in it because my daughter was pursuing that, so she went to Miami University, studied music. She went on to Indiana, where she got her master's in vocal performance, and can't tell you how much money I spent sending her to Austria for the summers and Italy for the summers, and goodness knows all this education. So after she graduates, she comes to Chicago and she's like, Mommy, I think I really want to be in the financial world.
Oh no.
I'm gonna ring her a little back, Damn,
oh my gosh.
Going to a bunch of concerts and hearing stuff. So right now she's a wealth manager with Raymond James. She started off with us going through all their program, and God knows there's only a zillion credentials and licenses you have to get. I think it was like 2 years of studying and getting certifications, and anyway, she's with Raymond James, does financial planning. Once upon a time was the most irresponsible college kid in terms of balancing a checkbook, which was never. And
don't tell her clients.
Most responsible financial planner. There is hope for our kids.
That's great. That's great.
Yeah.
Wow, from opera singer to Raymond James. It's funny. My buddy used to be the head trader for Raymond James in Vancouver, and
Oh, really? You
yeah,
know,
yeah, yeah. And he's definitely not the most responsible guy in the world. I can tell you stories,
they're
but
actually a really good firm. You know,
they
I'm
are. They
impressed
are.
with they had a guy who stepped down a couple years ago, but he was a fabulous technician, just in terms of thinking outside the box, in terms of the valuations of some of the companies like Amazon at the time, talking about how undervalued their database was and how valuable that was, you know, things
Wow.
like that that people don't really look at. You know, they're just to analyzing the balance sheets and stuff like that, and not necessarily knowing how to value these other intangible things. So he made a number of really good points. Maybe it was like 6 or 7 years ago. I'm like, yeah, I can get on board these fangs. I get it now. I get it now, you know.
Yeah.
So I think he went to work for some other private firm, but I think overall it's a pretty tight firm.
Mhm.
Linda, have you read the latest Market Wizard book?
I've not.
Oh, you haven't? Oh man.
No, I haven't.
Oh,
Is that the unknown Market Wizards or
Unknown
something
Market
like that?
Wizards. Yeah, yeah. It's a good one. I enjoyed it a lot. We had a few of the wizards on the podcast previously. Good people. So I'll ask you this: is there any like memory or moment that sticks out during your interview process for Market Wizards?
Oh God, I was so sick at the time.
Oh,
You know,
really?
I had this, oh my God, I had this chronic fatigue syndrome. It was horrid. And I remember I couldn't even drive. I took the bus up to New York to meet with Jack. And I don't even know how he found me. I mean, it might have been through, at the time I used to go to the MTA, and I had been a trader on the exchange floors. And then I actually left and went upstairs, meaning my own home office, which I created, which at the time we didn't have electronic trading. The software was pretty primitive. Data feeds were primitive. I think I paid $1,000 a month to run a line to my house to
Yeah.
transmit the data. I mean, people, you guys have a luxury now with the, you know, low cost of admission to the game, you know, but I'd pay $1,000 a month just to run the data line to my house, and then another, you know, $1,000 in fees and for data fees. I mean, it just went on and on and on. So all of a sudden, you know, the costs were high, but I was developing a program, you know, to apply my type of trading and style to the things I believed in, which were using a very short term, like 2-period rate of change, which has a good signal to noise ratio, you know, considering some other things. And it dovetailed into this tailored trading book that influenced a lot of my work. You know, a lot of it was sort of the early Toby Crabell, Larry Williams type of style, you know, get in. I didn't necessarily do the range expansion that Larry Williams did, but, you know, put the positions on, hold them overnight, exit them the next day or the following day, that type of rhythm, you know. And Jack didn't quite believe, you know, that could be done that way, because he was a more traditional institutional technical analyst at the time. And so I showed him my track record, and I'm like, clearly there is an edge here, you know, and there's also a low standard deviation to the bottom line. And so I showed him all my statements and stuff going back a couple of years, and talked about why I, you know, developed these models that way. And at the time, I think we were having dinner someplace in New York, and he had a little tape recorder on the table. I had no idea. I had no idea that he was writing a book, Market Wizards, or anything like that. You know, I was thinking, well, maybe he'll just, you know, stick a chapter in there with, you know, a couple women, or I just wasn't thinking at all those days.
Mhm.
So, you know, I just blabbed away like I usually do, and answered his questions. And I took the bus back home. I think I caught the last one back, you know, before you know, the terminal shut down, at least going to where I lived, which was in southern Jersey. And didn't think anything more of it. And maybe like a month later or 2 months later, Jack called me up and says, you know, I got a little manuscript I want you to review. And he sent me this thing that was almost verbatim, you know, me talking at the table. I'm like, oh my gosh, you know, I didn't quite realize what he was doing. So it was something that was very helpful to me at the time. It gave me a great break because after that, I started managing money. And I had been doing business with Revco down in Memphis, Tennessee. They were pretty big entities at the time. Willard Sparks used to be a major figure. And I was clearing some trades through Revco that went through that office, just my own account. And I used to have like 3 or 4 different accounts in different places just because I seemed to get caught in these deals where, one firm would shut down because the river floods in Chicago or
exactly.
This or that, I'm just a big believer in backup. Always have several accounts funded and stuff. So I think it was Willard Sparks' son was connected to somebody else that was allocating money to traders. And I actually first did an account on, quote, other people's money, who was the mother, this is really convoluted, the mother of the guy that backed me on the Pacific Coast Stock Exchange floor. So when I very first started trading, and then I blew out, I needed funding because the clearing firm desperately wanted their money back, and since I had 0 balances and big deficit. So they put me in touch with this guy who was one of the first to start this scanning of all the exchange floors for the option pricing. And he had this huge giant computer that filled a whole room in Battery Park Plaza. And it would, scan all the exchanges. This is out of line. This is out of line, And then he'd, send me around to try and put on spreads. And of course, all the quotes just had to be adjusted. It was like really a hopeless game. The market makers would laugh at me like, oh, that's not really bid there, We'll change the quotes,
I remember that.
Talk about ultimate games and rejection, And this is before everything was 100% automated like it is now with all these firms keeping stuff in line. I mean, the options are perfectly priced. So there's really not the edge to doing these complex, boxes and conversions and reversals and strategies like that. Butterflies, it's just various ways of goofing around, in my opinion. So, so that's what I was doing. And so it turns out Morris and I became pretty good friends after me getting slammed every week by him. And he, I said, Morris, I really need to show some performance on an outside account, not my own, because it doesn't really count if it's your own account. They want to see that you're responsible with other people's money. So I started trading this account of his mom's. I don't even think she knew that it was money placed
of course
with
not.
Some blonde in New Jersey, somewhere. And so after like about a year, I showed it to the, guys down at Revco. And one of the first accounts I got, believe it or not, was Pritzker's. The Pritzker's now own major hotel chains. They have a lot of money offshore. I didn't really know who they were, but they were a little bit more open-minded into alternative asset allocation, right? So I think they placed like 350,000 with me, and now I had like 3 or 4 accounts. And then it was sort of like when the street found out that the Pritzkers had money with me, they all wanted to put money with me because they thought, the Pritzkers must have been doing their diligent research and so forth. And I had, some credibility with the book, although I'm not sure in those days that book really offered that much credibility the way I was talking there. But it's like performance attracts money. So you take that money, you perform. And I think that first year I did like 65% after fees. And then that attracts more money. And I had a style that varied enough from the traditional CTA styles, trend following, or these types of things that my greatest clients became fund of funds. So what the fund of funds would do is they'd pick anywhere from 5 to 10 managers. It could be doing agricultural spread arbitrage. There was one guy that sort of specialized in that. The trend followers, of course, fill a bucket there, and I'm short-term discretionary. So when they would be losing money, I coincidentally would be making money. Just, I don't know why, sort of random. And so that sort of became my niche client, these fund of funds. And it's interesting because they are so astute, in watching every single little detail. So I remember they come and do due diligence to my office, twice a year. They want to come and make sure you've got, backup and good staff and good support staff. I had one guy who did all my, infrastructure stuff, IT, and a guy that did my execution and so forth. And the guy walks in and he's like, he had these stats of my P&L on every single market. I wasn't keeping that at the time. He's like, okay, well, let's see. Last year, the bonds were your best performing market and this coffee was the worst performing. Why were you in this coffee trade or something like that? I'm
really?
like, oh, shit, I forgot about that one. So it really kept you on your toes. And I knew that I had to have a certain standard of monitoring everything. And, it was really insightful. It definitely kept you in line. I think if anybody's trading, and they knew that they had to be accountable, at the end of every day or at the end of every week or anything, to every trade that they made, somebody was seeing that. I think they would trade a very different style. I don't think that they would settle for marginal trades. I don't think that they would let losses run as much as they do. I think it would cut way back on the volatility. If you took anybody's account and you looked at their biggest loss each year, it would probably be very disproportionate to their larger wins, and probably if you eliminated everybody's one or two biggest losses, their profitability would triple, because that's just, I don't know, the nature of way people are. So, but then I have heard of cases, I know one or two very, very big traders out in Palm Beach. I won't mention any names, but they're well known. They've written books, very well known. And the same firm that had originally started a fund for me, 6800 Capital was the name of that firm at the time, had started a fund for one of these other traders. And I think it had actually been a couple of years earlier. And despite this trader having a phenomenal reputation, being able to buy a mansion out on Palm Beach, he could not trade other people's monies. He just could not, it was, I don't know, maybe if there was self-consciousness there or befuddling him, or maybe he liked to, take a little bit more heat on things. I have no idea, but it just didn't work for him. So, everybody has different styles and where they're coming from. And some things work for some people, some things don't work for the others. I really think it helpful if somebody had a way of being accountable with a partner or a buddy, perhaps swapping statements at the end of the day, or, anything just to keep you mindful about overdoing it. Yeah.
Yeah, that's very interesting. How that could stifle, like I think I could understand that, having someone looking over your shoulder or being on your statements could maybe stifle with, the trader's performance.
Totally.
Like you were mentioning. Yeah. And that's what I was kind of getting at when I was asking you earlier, Linda, between like you managing your own account versus managing someone else's money. And if you had a preference, or to you, it's just different. It's just a difference.
Well, I loved having a fund. I'm the type of person that likes to, bring the apple for the teacher, put it on our desk and have her say, hey, good job. Look, you outperformed everybody else in the class. I'm like, oh, thank you. So I like that, Right now I shut down my fund primarily because the data fees got so excessive. I had 3 or 4 different platforms I'm running, software, all different sorts of things that they could do. And for each different one, I had to pay a whole full set of data fees. And I had to do this for 3 other people besides me. And so when the exchange went to this model of the professional fees, all of a sudden I was paying like $6,000 a month just for the data feeds. And I was like, really, wait a minute, can't I consolidate some of these? It was just so unfair to have that big jump up. It was actually even a little bit more than that. And then it got to be so cumbersome. The audits, the exchanges started wanting to know the P&L on every little market or product you traded, the audit process, and the audits just doubled in cost, and the attorneys doubled in cost. And because you always have to have attorneys. You've got the blue sky laws and different things like that with your disclosure documents and updating and so forth. And the accountant, the accountants were just going crazy. And all of a sudden I had this ridiculous amount of layer of fees. And I thought, maybe that's God's sign of saying, just close things down and, go back to just doing your own thing. I had a good run. It was, and a lot of tasks were taking my time that weren't necessarily trading oriented. And I just really enjoyed the pure trading part. So that's the way that came about. So I liked doing it at that point in my life, Sure. And now I'm sort of a little bit up in the air. I've been trading, but low leverage. Not running my full program. I do have the most fabulous assistant in the world. It took me like 3 years to find him, Kyle. So, he the first 2 years we were trading and having fun. And then I had to have a hip replacement last year, and do some things like that. So I needed to take a little break and stuff. So I said, Kyle, I want to keep you forever, but I can't trade for these periods here. And so he and my husband, Damon, who you just mentioned, you interviewed, Damon's been in the markets even longer than I have. And he's really good with market profile work, really good. So probably the best I've seen. And so he and Kyle have this little trading room where they kind of keep a steady pitter patter all day and keep people company and point out the areas in the market that they're looking at. He plays rock and roll in the start off the day and rock and roll at the end of the day. And it's kind of fun. We actually have a professional drummer in there from the Steve Miller Band and another guy that plays bass. I don't know, it attracted all these professional musicians, a professional flautist who plays with a symphony. I'm like, who knew, so cool. It's a real great group of people, just sort of a small family. So Kyle's busy doing that with Damon, but he'll be there, when I want to come back full tilt boogie.
Very nice.
That's great. Now we'll have to get Damon back on the podcast and bring the band. So, they can maybe play the Joker for us, from the Steve Miller.
Oh, he knows all the songs. It's pretty funny.
Yeah, we'd love to have him to play the Joker for us.
It's pretty funny because I had a friend from Australia just out here for the last 2 weeks. Her name's Mandy, and I met her 5 years ago when I was speaking in Melbourne. And she's actually a trading coach, not just markets, but really could be a life coach, probably the most perceptive, insightful person, I've ever had the pleasure of interacting with. So I'm like, hey, Mandy, come back over to the United States. She'd only been up there in Illinois when I was up there. Now I'm down in Florida. I'm like, come on and check out the horse shows and let's have some fun and stuff. So she came down. And at that time, Steve Miller Band was performing just down in Pompano. And so, he got us tickets. So, we went to the rock concert there. And so when she was leaving the other night, I said, Damon, you have to pull out that picture of when you were on stage in your white jumpsuit with these, open down to the crotch there and this fringe hanging from the arms, it's like a hoot. I said, you got to find that picture from Mandy. So then he comes back with this whole packet of stuff I had never seen. I'm like, damn it, you've been holding out on me. Where he's playing up on stage. I'm like, oh my God, long hair, mustache, probably about 50 pounds lighter, this little skinny toothpick. It was hysterical, So he did that for a year and a half of touring on the road. And, but then that's a total burnout job. It really is insane. It's just really hard. So then he packed it in, and that's when he went down to the exchange floor, but he continued on weekends to play in a wedding band.
Oh, no way.
Yes. Through playing in this wedding band. He knows every song under the sun. So it's really fun. He plays lead guitar, doesn't sing, but, that's his gig.
Yeah, we'll have to have him come back.
Yeah,
on the podcast.
Shout out to Damon. Shout out to Kyle.
Definitely.
Yeah,
I'll put both of them in touch with you. Kyle's a hoot to listen to too, because he, oh my goodness. If you got a second, I'll tell you about Kyle, because it took me forever to find him. Brett Steenbarger, the family offices. Finally, I threw a family office down here in Florida, and connections of connections. I came across Kyle, who had just gone through the CFA program, sort of an advanced business degree down at one of these Florida universities. But he'd always be, on his charts in class and stuff. And he just loves charts. and he's quiet. So my two main ingredients, for somebody to be assistant, loves charts and is quiet and is super good at execution. That's Kyle. So when I first met him, he came up to my house, not an ounce of fat on his body, mind you, this, and wearing a suit, a little pencil tie, glasses, very short hair, looking like the ultimate nerd geek, right? I'm like, this might be my man, And if you see him now, he lives about an hour north of us, like up in Port St. Lucie area. And right this week, he's out scouting wedding venues in Colorado because his fiance, who's his original girlfriend from 10 years ago, they're finally going to get married. So now if you saw him, he's got long hair down to here, still not an ounce of fat on him. The glasses are gone. And he came to my house, a couple of weeks ago, and he's wearing those pants that have the crotch down by your knees. You know what I'm talking about? And then the jogger pants or something. I mean, it was just kind of taking me aback because it was a more progressive fashion statement there, and I'm like, oh, you go, guy, you go. So last year, at the start of the year, he had never really been a swimmer, didn't bike, didn't do anything. And so he put it on his list at the start of the year that he was going to do a half triathlon at the end of the year. No kidding. Yes. So he practiced swimming all year, ran some races, practiced running, which he said he hated at the time, bicycled. And then I think it was the start of December up outside of Orlando, they had this half triathlon, and they all went up there and he finished it. So I thought that was a really, really cool story about, no limitations, you're not skilled in any of these things, yet you put it on your list, your bucket list, and you can go out there and knock it off. So he'd be a good one to interview just because he's such just a very consistent thinker. He probably caught on to all the technicals and the work that I do faster than anybody I've seen, to the point where I would trust his work more than my work, If I didn't have a good night's sleep, I'm like, Kyle, what's our play for the day here, And he can just prattle it off all day long. He's got this little tape loop with him and Damon running the room. And I'm like, I'm just going to lurk and I'm just going to listen and do my own trading as I hear them all day. So he's a good kid. He just, in terms of somebody that's kind of come up, for the last 5 years, and he does some trading on his own on the side. I know he likes trading options and so forth. He's very modest, but just somebody else's journey, that's not in a Market Wizards book.
Yeah, that's excellent. If you vouch for him, Linda, that's good enough for us.
Definitely.
Big shout out to Kyle. Great job. Yeah, Damon, Linda, I got such a kick out of him, like in our podcast interview. He's so, like, just from being the musician to the stories he had. He was telling us the story, which you were even mentioning, having the, back with the early electronic trading days, and he had to get like this huge wire through like his library into his bedroom so he could like wake up at 4 a.m. and like check the charts or something another like that.
Yeah, he put the Globex machine in the closet.
Yeah, the Globex machine in the closet. Yeah.
He's got great stories from the floor. He used to do all these big players' execution, Monroe Trout, Paul Tudor Jones. He did all the execution for them. In fact, that's how I met him. He was a broker down in the S&P pit. He had traded for himself before that, but he's a broker in the S&P pit. And so for years, he handled all my orders. We didn't have any relationship until maybe 15, 16 years later. So definitely nice to have somebody else that's in the markets,
Yeah, I bet it is. That's really cool. Linda, we'll get you out of here in a moment. I want to ask you a little bit about just a couple of books, because when I went on your website, you have a list of recommended books, and not just trading stuff. And so, some of the books you have on there I love, and one of my favorite books of all time, which I want to ask you about right off the stop, The Art of Learning by Josh Wayskin. Do you want to just comment on that book and why you have it on there?
Well, first of all, it's a very short read. It's easy to read. It's simple. I mean, anybody could read that book in a relatively, one day type of thing. And I thought that was a very inspirational book as well. The way he was able to adapt from being a chess player and how he went about becoming so proficient and expert in chess to martial arts field, this push hands type of style, and then excelling in that. And I thought it was very thoughtfully written. So I think that anybody who reads that, it's going to start triggering little ideas in your head. Did it do that with you?
It absolutely did. I 100% agree with the inspiration and just how somebody could transition from, he was a chess prodigy then to becoming a world champion in push hands. And then just his thought process and like just the processes of his like practice and his discipline and just, all those things that he went through. I mean, it was highly inspirational to me. And I think like why I've had success or I remember reading it when I was playing poker, like seriously. And I think it really took my game to like another level. And what's funny is it had nothing to do with poker, right? Nothing to do with trading. And that's why I kind of like reading these type of things too, that because you can, at least for myself, you can improve yourself in a certain discipline, reading something that doesn't even seem like it really correlates. But even though this one, I guess, a little
Well,
more.
what you see with all of these superstars, be it sports or chess or anything like that, is that excellent concentration and focus. That's
Sure.
number one. So if you want to be in a performance oriented discipline like trading, we can control how many outside distractions we allow into our arena. Our environment is one of the very few things that we can control. And so, I see these people on Twitter intraday or, surfing social media or the internet or blogs or so forth. And I don't think they realize how harmful that is, overall. You have to learn to think for yourself, and you have to learn to see and feel your own roadmap. You have to believe in something that is your work, and then you'll be able to trade it on better leverage or know when it's not working and when to, bail or, apply more rigorous money management. So all humans, one of our problems just in general is that we're very susceptible with these cognitive biases.
Yeah.
And, people don't realize all the time how many biases that are coming in and interfering with their thought processes. That's why, for me, it was really important to have models, statistical models that I could say, oh, the model's saying, here's a little, setup for a long trade. And I can't be bearish and trade that way.
Right.
But in general, these biases are influencing you, whether you want to believe it or not, your subconscious. So if you hear I don't even listen to TV. I don't want to hear these guys, on the financial news network or anything, because I might hear somebody and somehow that voice is in the back of my head, and it'll either be like, oh yeah, I can see a bearish opening there, or else it'll be, oh, I have a really good setup, but I can't do it now because it's already priced into the market because it was already put out there on the TV, so it's a lose-lose situation for me. If I hear anybody, I don't want to know anybody's opinion or, or thoughts, just because I have to trade my own, style and model. And some people are very good at tuning that out. I had another gentleman that, first came and worked with me when I had my fund, Rick Jeanette, and he had actually worked for another turtle show before he came to my shop. So he was sort of instrumental in helping me learn to work more size. But he would always walk in my office with the Wall Street Journal in one pocket and another newspaper in the other pocket, because he had to ride the train from Philadelphia over to New Jersey and then get into my office. And I would have never been able to look at a newspaper or anything. It would, just might be a little bit of distortion for me. But other people, it's no problem. So I can only speak for myself.
Mm-hmm. Yeah, I think it's a great point you make. And I'm the same way, Linda. I really just try to, I don't like, listen to anybody else or hear, block everything else out. And I think it is just that awareness of just, yeah, I mean, we could have like these little biases, or just you hear a comment from somebody and it's sitting with you and you don't even know it. And yeah, I try to be as like ruthless as possible with these things. Yeah. All right, let me ask you about this book. I thought this one was interesting, and we may have actually touched on this in the first podcast. I'm not sure, but I'm going to ask you about this book, The Secrets of Turf Handicapping.
Oh, that's fun. It's just a different look on betting strategies.
Mm-hmm.
And again, I like things that deal with statistics.
Yep.
And so it deals with that arena. You know, I haven't read that one for ages, but it's yeah, it's just, I thought something fresh.
Yeah. Did it give you any different maybe ideas or different ways of looking at the market, perhaps?
No, I just like seeing the way other systems are organized. I like
Sure.
seeing, you know, other people's types of modeling that they do.
Okay.
You know, statistical work. I believe there was different handicapping things for when it was muddy. You know, they had a different hand and the type of shoe that the horse was wearing. These little details that other people wouldn't necessarily bother to look at. So it's the same thing. You think it's hard to find an edge these days in the markets because, you know, there's a zillion quants out there with billion-dollar hedge funds and supercomputers just grinding away all day long. But you can't look at it that way. You have to think that it just takes one little twist that other people really aren't looking at or considering.
Mm-hmm.
And that might give you an edge that these, you know, the quants don't pick up, because in general, you know, the way the quants work is they're grinding huge amounts of data, you know, and it could be everything, time of day functions, you know, throw in a few fundamental variables, you know, technical stuff, volume points. There's so many different things that you include in these models, but they're still doing it across these broad swaths of data. And you as a market participant can actually recognize when things or conditions are changing a little bit faster than some of these models can recognize. See, so it's all about relationships. It's all about perceiving this data point relative to that data point, or this data point relative to this indicator, or, you know, this market relative to this market. So everything that we do in the markets is really about processing relationships. And you know, at some point you have to have a threshold at which that relationship stops working or doesn't. But I think an experienced trader can recognize a little bit sooner when that's the case, as well as recognizing when perhaps an aberration is occurring. And in general, if there's an aberration or an outlier, something that the market has not seen before, perhaps a radical increase in volatility, a very large gap, you want to go with that. You know, you want to go trade in the direction of that. So in the early part of, you know, 2000 to 2008, we had been pretty banded in our range of yields. Okay. And then there was a period where the yield on the 30-year bonds started pushing below 4%. And that had not happened for decades, you know, but it was just, now we're breaking outside of that band because we like having limits. We like overbought, oversold, you know, wholesale, retail, but now we started defying that. And so your first instinct is like, oh, you know, these bonds are too high. They've got to come back down, you know, and push the yields push back above 4%. And that was not the case. You know, it was an outlier that was giving powerful information. And the real trick was to go in the direction and buy those bonds, even though they had not been up at these levels in our lifetime. So I think that it's easier for humans to do that than the machines. Of course, the machines are free of cognitive biases. And then you have that category of artificial intelligence, which everybody seems to think is the cat's meow. And it really hasn't panned out to be that, as you would think. So you have these major players like Paul Tudor Jones and big entities. And I think that they've been mildly disappointed with the results from some of this artificial intelligence thinking. And part of the problem is, you know, it's only updating by the last updates as well, you know, so how sensitive is it going to be to a regime change, you know? So I guess I'm saying that as a smaller trader, don't feel like you don't have any edge at all. You actually have an edge, that can't be gotten by, these very large funds. They just can't move the money like that. They can't capitalize on these things in such an expedient way. Most of the algorithmic trading that you see, everybody's like, oh, the algorithms are going for the stops and stuff like that. And that's such a crock of shit. I'm sorry.
Exactly.
Because
Exactly. Thank you.
Damon's original partners were the guys that started GetGo, and GetGo was the
Yeah.
original high frequency trading firm. Guy that used to work for me went to go work for GetGo and all that type of thing. They're just grinding it out like little minute by minute. Originally it was a market making type of algorithm, and there's no edge to that anymore. Then you started to do a little bit more technical things like breakout from standard deviation functions, but very short term. It's not the type of mechanism that's going to drive price to a new level or a new valuation level, like that higher time frame, mutual fund player. And so I think people credit these with far too much. And the other major bulk of algorithmic activity tends to be from execution. Things like VWAP, that's pretty good, but they have so many other types of execution algorithms now, and that really kind of accounts for the bulk of the activity. There's still a human, pushing the button behind that. So, just stay to your own game and don't try to think, who's doing what and, short's got to cover or anything like that. Just stick to your own game. And you just have to find one little relationship that you can kind of do a little arb with, or, get a little edge from. And that's all it takes.
Thank you. Thank you so much. It's so great to have someone of your stature reinforce these principles, because we teach every day and people are just reaching for, they're reaching for the magic, elixir, or the holy grail. And it's just hard work and finding a little bit of an edge. And I'm so happy that you someone of your stature just kind of backed up everything.
I'll give you one last analogy for fun. I like playing bridge. I haven't played much, in the last couple of years, but I used to play. And now bridge is what you'd call a closed system. You just have a deck with 52 cards. And it sounds like you also have experience with poker. Okay. Closed system, 52 cards. There's 680 billion initial combinations that can be dealt. All right. 680 billion. And if you were to add all four players, the first hand, it's something like 740 trillion combinations. If you were to look at a chessboard, again, a closed system, no outside variables, I think it's like 280 billion possible moves by two people, just the first four moves. So the first four moves that people can, that two people can make, there's 280 billion different combinations. So with the markets, when we get caught up into this linear thinking, a little bull flag on the 5-minute chart, I want a condition or a pattern or a setup. I mean, there's infinite billions of different combinations. And that's why they say that the same thing never occurs twice the same way. So the market's going to always repeat itself, but not exactly, if that makes sense. And, we want to have something that we can latch our hands on, a little Bollinger Band strategy, do the breakout and da-da-da-da-da. And you can't think like that. So one of the beneficial things to study, if you're newer, is more market profile type of work. Personally, I don't use it, but I think it's exceptional at, showing concepts, categorizing days, into maybe 6 to 8 different groups. What does a normal day look like? What does a normal variation day look like? What does a trend day look like? Today's been a trend day up, and it has a certain characteristic, so you can start to put things into different buckets. And then I think that really helps feel comfortable with a short-term context, at least. So there you go.
Excellent. That was great. That was great tidbits you were just dropping right there. I'm going to ask you about, I believe there's a book written on this person. I'll ask you about her, then we'll get going. Hetty Green. I believe her name. So
I made the mistake of mentioning that on Twitter. Oh my gosh, I have to tell you a funny story. I don't know.
go ahead, go.
I
Yeah.
was just feeling in a very flippant little mood. And at the end of the day, my friend Mandy's in town and, she's always like, oh, she has some buddies on Twitter and stuff. And I had pulled it up and somebody had posted these rules of Jesse Livermore or something, he's the greatest trader of all times, And I'm like, he did die broke. I mean, I said like 4 words, and you would have thought that I shot Jesus Christ or something. The flashback that I got, I'm like, Jesus, I'm like, it's a great book and there's great quotes, but the dude lacked money management, He went bankrupt 3 times and he broke all his rules. Anybody can put out good rules, but what's one of his rules? Don't average a loss. And what is he doing? He's averaging a loss all the way down until he goes bankrupt. Don't take tips from other people. And he's trading off tips from other people. I'm like, whatever. I said, there are other unique stories out there. She's just a little bit of an outlier. They used to call her. I don't know how I ended up with this book in my library. It was there like 30 years ago or something. The Witch of Wall Street,
Well,
that was
I've heard
title. I'm like, The Witch of Wall Street. And I'm like, what's this about? And
I read all these rumors about her,
she just say she came from a very, very, very strict Quaker family, very strict upbringing, wore black all the time and was frugal as could be. And,
exactly.
Just a real patient value investor. She just had common sense. She goes, I would wait till, and she had a modest inheritance, to begin with. So she had working capital, but I mean, she took that up like billions of dollars in today's dollar. Wow. And she would wait. Patience till like there was this big fallout in the market and flush and everybody's bearish and nobody wanted it anymore. And she'd go and buy real estate and buy bonds and buy stocks and stuff. And then, as the market came back and when it started rallying and the proverbial ducks are quacking, everybody wants it again. She's like, okay, fine, I'll feed it out to you.
Exactly.
And then she'd wait like another couple years till you had the implosion in the cycle again. I'm like, there's lots of stories out there. I'm like, at least she didn't have drawdowns, So.
Exactly. I heard the best stories about her were like that she had stock certificates sewn into the lining of her clothing, right? And the other one was that she was so cheap that her son had all these dental issues and she refused to pay, to get his.
I think it was something like with his leg where he had fractured his
leg. That's what it was.
Yeah. Something. But at the time the doctors had said that there was nothing that could be done or something along those lines. Who knows what the real story is? I mean, it was her son. I don't think she would, totally, leave him to die, but who knows?
I hope so. Yeah.
Don't talk back to your mom.
Exactly.
She might not pay for dental care.
Exactly.
What when did she live? What time period?
I think it was the late 1800s, and I think she might have died in 1919. I'm just off the top of my head, so I don't think she was there during the crash, the implosion in 1929. But I think it was that period. The railroads were big entities then, and the railroad stocks, huge swings in these things. And I think that she actually ended up bailing out New York City. I don't know why they were going bankrupt or bust, but that's one of the stories that she was one of the very few that had cash to come and aid bankrupt New York.
Wow, interesting. So real early days, probably even before the like the ticker machine was invented, or because I think Edison made that. Like the tape ticker. I know this because my son learned it in school. He's like, "Oh, Dad, you see what I learned about the
that's cool.
The stock market." Yeah.
Well, that's also remarkable, and I mean, is that this was a woman. Women didn't vote. They didn't have any rights. They weren't allowed into the men's fraternity. But here she's kind of rubbing elbows with J.P. Morgan or somebody else, as they're trying to put together to bail out New York. And I think that's what really makes her a story more astounding. Women weren't given responsibility for money. They weren't taught anything about this, but I think her father had actually given her quite a bit of education on investing and, had taken her under his wing. So, but I did think it was kind of remarkable. Here's this amazing story. It's I think they should make a movie out of it. She was a very
Definitely.
gruff personality. She wasn't charming.
Well, back then, could you imagine dealing with male traders back then? I mean, good grief. Like, I mean,
I don't think people recognize just even with Jesse Livermore, even though his book is wonderful and so forth. I mean, it wasn't just the bucket shops, because he kind of graduated from that level, but they had pools, and these pools, would mass together and, get on these campaigns to drive prices higher, or cause a break in the market by all selling at once. And he was part of one of those pools. He just, did it on super heavy duty leverage, which is probably why he blew out 3 times. Of course, he had his mental demons as well. So don't make light of that. But, there was a lot of unfair advantages that you wouldn't necessarily have these days.
Exactly.
Yeah. Well, this is before the SEC, right? And this is before, like, I couldn't even imagine as Wild West. I mean, literally, I guess probably the Wild West during those times. Yeah. And I guess with that, this will conclude today's episode of Confessions of a Market Maker. If you guys enjoyed this episode, please rate and review it for us. If you'd like to join a supportive and professional community of traders, you can join us at microefutures.com. Linda, let the listeners know where they can find you and anything else you want them to know.
I have a website. I haven't updated anything on that website for a couple of years, but it's there. That's the way that you can reach me. If you wanted to send an email, I have a contact thing, and any emails will get to me there. And if you're interested in Kyle and Damon's trading room, I think that's set up through there. And I am on Twitter, Linda Raschke. It's so funny, when they came out, I get an imposter every day. Somebody at the end of the day, I get on to see, okay, who do I have to send in a report to? Walt Deemer's always contacting me. He's a hoot, he's like, oh, Linda, you got another imposter, his message, So I'm like, okay, uncle, I'll do that little blue check mark. It means nothing. It really means nothing, except that I'm paying Elon $7 a month or whatever that thing costs, Hoop-de-doo.
Oh,
yes, I'm on Twitter, and you can reach me if you want to send an email through my website, conveniently titled lindarashke.com, or actually .net. Yes.
There you go. And go get her book too. Go get Trading Sardines.
Yeah, great book.
It's not on Amazon. Yeah.
Oh, what? Not on Amazon?
No, I think I only have a couple hundred copies left on my website. Maybe next year I'll do a version that can be on Amazon and not have anything to do with it. So kind of a little bit pain in the butt, setting up the fulfillment center and everything. But, this is how we learn about other businesses, right? I learned, I did self-publishing, I printed it, got the layout guy, the fulfillment center, all the little moving parts, and that is, I'm digressing now, but I learned so much about the explosion in fulfillment centers, 8 to 10 years ago. Amazing story if you research those. Obviously, Amazon now is, really a huge entity there, but it's incredible if you ever see a tour of one of these things, which you can go online and see them. I mean, they're just, 50,000 square foot things in the storage, and the way they, it's all all robots going to this bin and pulling this item down. And it's pretty amazingly automated. It's got to be a little cash cow for these companies.
Huh. Interesting. Just robots. Robots are doing all the work.
At most of them, yeah, you can. I saw one YouTube video. It was pretty impressive, how they didn't run into each other. It's all 100% computerized. These little things that go, and then they go up to this bin and pull this item out of that box, and bring it back to the thing to be wrapped and shipped. And when you actually purchase, my book, it goes right to the payment processing, and then to the place that generates the shipping label. It automatically verifies the address, and it comes out with something that gets put on top of the packaging. It's really incredible.
Fascinating worlds we're in. JJ, parting words?
Oh, thank you so much for being with us.
Yay. Yeah. Okay. Yeah. Sorry, JJ.
No problem. No, we're just every time, I tell people in our trading room, we've got Linda Raschke. They just call you LBR. It's like, it's it's like LBJ. It's like you're very well known, and
I always know
know,
when it's a solicitation phone call because they're like, "Is this Linda
yeah,
Rashiki?" It's like,
yeah.
okay, goodbye.
So I just all I have to say is, oh, we're speaking to LBR, and everyone's like, wow, cool. So we're really
Well, I
really
wish
pleased
your
to have
gang well. It sounds like you have a good group there. Have fun with everybody. And
Thank you so much.
yeah, I'll get you Kyle and Damon's contact.
Sounds good. Yeah, we're little Steve Miller on the next podcast would be great.
Yeah.
Excellent. So for Linda Raschke, I'm Paulie Walnuts. He's the gorilla of House Street. You stop, though.